While everyone chases Bitcoin and tech stocks, there's a historic financial asset that 99% of people ignore, even though it's inside their phones and cars. Financial expert Robert Kiyosaki and analyst Peter Krauth believe silver is the cheapest financial asset that could create fortunes in the coming years. From a business psychology perspective, the average investor suffers from novelty and glitter bias, where the brain instinctively gravitates toward the noisiest assets in the media. Meanwhile, quiet assets that slowly accumulate value are completely ignored. In this video, we'll decode the psychological and economic secrets behind the scenes that make silver a neglected historic opportunity. Silver is not just a metal. It's a critical industrial component in solar panels, electric vehicles, and electronics. Global demand for silver in green technology is skyrocketing, while mining supply struggles to keep up. Yet the silver price remains suppressed, creating what experts call a coiled spring, ready to explode. Historically, the gold-to-silver ratio has averaged around 15-1. Today, it stands at over 80-1. This means silver is historically undervalued compared to gold by 5 times its normal relationship.
When this ratio corrects,
silver could multiply several times while gold barely moves. Kiyosaki calls silver the people's money, accessible to average investors, unlike expensive gold. The psychology here is critical. The ignored asset becomes the opportunity when the crowd finally notices. Peter Krauth warns, by the time silver makes headlines, the best entry point will be long gone. Silver is not just a currency or a safe haven like gold. It is an irreplaceable industrial element. Solar panels rely on silver for electrical conductivity. Electric vehicles need it for battery systems. Electronic chips cannot function without it. Meanwhile, silver mines face severe supply constraints. Extracting new quantities has become increasingly difficult. This is the economic reality, an irreplaceable industrial demand colliding with a shrinking supply. The psychological analysis begins here. Masses suffer from hindsight bias. People only recognize the value of something after a clear scarcity crisis has already occurred. Investors fall into the trap of system blindness. They fail to connect massive technological progress with its physical need for essential metals. Here is where the disciplined investor strikes. He exploits this collective ignorance. He buys at the cheapest price while everyone else remains blind to the physics of the coming shortage. This is the psychology of the supply-demand blind spot, the invisible opportunity before the masses wake up. Robert Kiyosaki constantly repeats a warning. Paper currencies like the dollar are fake money. Central banks print them endlessly, leading to inflation that devours the purchasing power of your savings. When economic crises strike the markets, the fear center in the collective brain activates. This triggers a collapse of trust in the traditional monetary system. In this psychological moment, the escape toward real, tangible assets begins. Silver is traditionally considered the poor man's gold because of its current low price. So when panic hits, silver becomes the first refuge for millions of people worldwide. This sudden rush of the masses drives silver prices to insane heights. The collective stampede creates a feedback loop. More panic equals higher demand equals soaring prices. History shows that in every monetary collapse, those who held real assets survived, while paper holders lost everything. The question isn't if another crisis will come, but when. And will you be holding paper or real assets when it does? Position yourself now before the herd realizes what you already know. Most investors fail because they follow the crowd. But what if the secret to wealth is doing the exact opposite? Kiyosaki and Krauth introduce a powerful concept, contrarian investing, the psychology of going against the herd. Financial success doesn't come from following the crowd. It comes from having the psychological courage to buy when everyone is uninterested and selling when everyone becomes greedy and euphoric. Silver represents a real test of your patience and emotional discipline in the face of market volatility. This is where most investors break. Can you hold when the market screams at you to sell? True wealth is built on tangible, real assets, not paper promises or digital illusions. While everyone chases stocks and cryptocurrencies, the contrarian investor quietly accumulates what has intrinsic value. This isn't just about silver. It's about rewiring your financial psychology to see opportunities when others see fear. The contrarian blueprint is simple. Analyze when the market panics, act when others freeze, and hold when they abandon ship.
This is where fortunes are made, in the silence between the crowd's screams.
Now is the time to reassess your portfolio. Are you holding real assets or just paper dreams? Follow us for more.